and we're going to get started. Hi there, everybody. This is Larry Pond. I'm a CPA and certified financial planner, also a longtime board member of the Better Business Bureau. So thank you to the Golden Gate Better Business Bureau for hosting this webinar on the latest on PPP loans and PPP loan forgiveness. There's a lot going on here. And if you have questions, go ahead and put in the chat. There's no guarantee I'll get to all your questions, but go ahead and post them there. I want to leave some time towards the end to address your questions. If there's some pertinent questions that are popping up as I'm speaking or during a good break, I'll look to my right and go there. And also, if you want a copy of these slides, put your email in the chat so Sonia can send you a copy. Oh, actually, Sonia, you wanted
yeah, I
prefer to send you an email, right?
Yeah, email me, and that's how I can better keep track of everybody's requests.
Okay, let's do it that way. So Sonia's email is Servin, SERVIN at bbb.org, right?
That's right.
Okay.
I'll put it in the chat kind of throughout as people, join, and we'll say it again at the end.
Exactly. Okay, so let's get started here. Let me just scroll past the next slide. So a little bit about myself. I'm a CPA. I have a lot of letters behind my name, but mainly I've been doing this since 1986. So this is going to be my 35th tax season. And I really enjoy talking about taxes and financial planning. And I'm a local. I was born in San Francisco, went to school at Berkeley for my undergrad, and went to Golden Gate University in San Francisco for my graduate degree in tax. So that's a little bit about me. So let's talk about what's going on here. So recently we had the Consolidated Appropriations Act of 2021, also known as CAA 2021. It's a 5,593 page bill that was passed by Congress on December 21st of 2020 and signed by the president on December 27th. Made a lot of changes to the tax rules. And most importantly, today, we're going to focus on the changes made to the PPP program. So as part of that, the new law gives us some clarifications of what the CARES Act provided for us. So the PPP loans were created by the CARES Act, which was enacted on March 27th of last year at towards the beginning of our pandemic. So what the COVID-related Tax Relief Act provides for us is that it reiterated that PPP loans that are forgiven are allowed deductions for those otherwise deductible expenses paid with the proceeds of the PPP loan. Before that, CARES Act said the forgiven PPP loans, not a gross income, is not including your income, but you did not get to deduct the expenses that you used the PPP loan to pay for. So that has changed. And that's really exciting. For us tax guys, I was like, hallelujah. That was really exciting that we don't have to do those really complicated calculations, because the IRS was bound by what the law said. At the time, the law said you couldn't deduct those expenses that you used with PPP money that was forgiven. So they clarified that. And for taxes, they also reiterated that the tax basis and other attributes of the borrower's assets will not be reduced as a result of the loan forgiveness. So this is a really big deal here. So gross income doesn't include forgiveness of the EIDL loans, the emergency EIDL grants, and other loan repayment assistance. So that's further good news. And also, as part of the COVID TRA, they reiterated that there's no requirement to issue 1099s on PPP loan forgiveness. So if you have a PPP loan that's forgiven, you're not going to get a 1099. You're not going to get a 1099 for EIDL loans or EIDL grants or all that. So that has been changed. So I think that's a big relief to a lot of people here. So what's the big news here? The big news here, we have something called the PPP second draw loans. So as you know, the PPP loan program closed on August the 8th of 2020. So the last day you can apply for a PPP loan was August the 8th. Well, now it's been reopened. It literally just reopened. It'll close on March 31st. So if you want to get another PPP loan, you better apply by March 31st. So let's talk about the second draw loans first. So those are for businesses with 300 or fewer employees, and you have to show a 25% reduction in gross receipts. It could be based on your first, second, third, or now fourth quarters of 2020 and compared with the same quarters in 2019. Also, we got some further guidance that you can use the whole year. So you can compare 2019 with 2020 if the reduction is at least 25%. So if your reduction happens to be 23.49%, that's not going to cut it. It's got to be more than 25%. So it's based on a calendar quarter, even if you have a fiscal year. And when you're doing the math on what counts as gross receipts, any idle grants or idle loans or any PPP loans you got earlier is not counted towards the gross receipts. So let's talk about the first draw loans. So you have second draw loans, now first draw loans. The SBA has issued a updated Form 2483, and towards the end of this presentation, I have links to the new forms. They're always being updated. So it's the Paycheck Protection Program Borrower Application Form 2483. The PPP reopened on January 11th, initially to small community lenders, and then to banks of less than $1 billion, and then as of the 19th, to all the banks. So they kind of phased in which banks can get a jump start on getting the borrowers. And also there's some size standards. You can't be more than 500 employees or more than 300 employees. Actually, for first draw, it's up to 500 employees. And it's just like the original PPP program. The purpose of the loan is, of course, mainly for payroll. So 60% for payroll. And then for non-payroll expenses, which is rent, mortgage, utilities. And now on these loans, we have expanded the expenditures. So that includes covered operations expenditures, covered property damage, covered supplier costs, and covered worker protection expenditures. We'll go over in a later slide a little more detail what those mean. So who can get a first draw loan? So it's for people who did not get a PPP loan before August 8th of 2020. So if you didn't get a PPP loan and you think you need some money, you would qualify for a first draw. And you can reapply or request an increase to a first draw loan that's been approved before August 8th of 2020. Now the deadline is March 31st of 21. Now also businesses who can get an increase to their borrowing would be partnerships that, because the rules changed during the year. So I know some partnerships, they got a PPP loan, but it's under the old formula. And because they changed the formula, you can go back and you have to go back to your original lender to get an increase under the new calculation. So this applies specifically for partnerships. Now, the important thing is that the SBA has not remitted the forgiveness payment yet. You haven't applied for loan forgiveness. So the increase can include the appropriate partner compensation, even if the loan has been fully disbursed in the first round. In the first draw loans, they've also changed the definition for seasonal employers. So they revised the method to compute the maximum amount. So the average total monthly payments for payroll for any peer selected for a seasonal employer beginning 2/15 and 19 and ending 2/15 and 20. So this method can compute a higher amount as long as you haven't gotten forgiveness yet. So seasonal employers can get additional funding. There's been some updated calculations for farmers and ranchers, and you can still request a loan from the SBA as long as you haven't gotten loan forgiveness. And then there are other borrowers. So eligible borrowers, for example, are ones who fully repaid their first draw loan for whatever reason. They got a first draw loan before December 27th of 2020, but they paid it back. Well, you can reapply for a loan. Or borrowers who return a part of their first draw PPP loan before December 27th of 20. So the loan increase can be approved by a lender. Or You were approved for a PPP loan at the first round, but you didn't accept it for whatever reason. So you can go back and get that amount. So those are the kind of borrowers that can do that. So the lenders that can approve increases on the first draw PPP loan started on January 25th. So it just started yesterday. So a lot of this stuff is late breaking. There's a new form 2483 SD. So this is for PPP second draw borrower application form. And on that form, you input the average monthly payroll, the PPP first draw SBA loan number, and then you have to show the calculation in reduction gross receipts of at least 25%. And then there's a whole list of certifications that you have to answer. First, to get a second draw loan, you have to have a first draw loan, 300 employees or less, 25% reduction gross receipts, and the maximum for the second draw loan is $2 million. So what is gross receipts? So gross receipts is all revenue in whatever form received or accrued in accordance with the entity's accounting method from whatever source, including sales of products and services, interest and dividends, rents, royalties, fees, commissions, and that's also reduced by any returns or allowances. Do not include the forgiveness amount of the first draw PPP there. So the question I get a lot is, how do I calculate this? It's based on your accounting method. If you're using the accrual method, we use the accrual method. If you use the cash method, we use the cash method. You can't do something different than what you're doing on your tax return. So we've been getting a lot of guidance from the SBA. So on January 6th, we got an interim final rule that gives us an alternative approach for calculating the decline in revenue. So a borrower that was in operation all 4 quarters in 2019 can compare the total receipts in 2020 versus 2019 rather than quarter by quarter. So that might make some sense. So run your numbers, see if the quarter by quarter calculation gives you the 25% or more, or overall, because you might have some quarters where you actually made more money, some quarters you made a lot less money. So we'll see how that works out. Of course, when you do the application, you have to submit copies of your tax returns to substantiate the revenue decline. So you have to show the information. Also, some backup accounting information is helpful too, such as bank statements and those sorts of things. So if the loan is going to be over $150,000, you have to submit the tax forms to document the revenue decline. For loans of under $150,000, you don't need to submit it, but for your work papers, you should still do the comparison anyway and keep that in your files in case the SBA asks for it. Sometimes the bank might ask for it too. So you have to use the full amount of the loan. So it's been dispersed, you have to use it. And you have to receive the loan under the first round. And the question we had was, it required? Yes, for the second draw, it is required. So that's a question we had. So you use the first loan prior to disbursement of the second draw loan. So, when you're making the application, maybe you still have a few dollars left from the PPP loan. That's okay, as long as it's all used by the time you get the second draw loan. So they've expanded the entities that can get these loans now. So besides for-profit businesses, independent contractors, sole proprietors, now includes more nonprofit organizations, housing cooperatives, veterans orgs, tribal businesses, and there's a detailed list of businesses. So how do you calculate the loan? The loan is 2.5 times your average monthly payroll. That's the same method we use when we're calculating the first round of PPP loans. However, the big change here is that if you're in a hospitality, food services, under code, the industry code of 72, instead of 2.5 times, it's 3.5 times. So you can get a bigger loan that way, because a lot of these businesses have a lot of payroll. There's a lot of human capital there. So 3.5 is definitely better than 2.5. So gross receipts and simplified certification of revenue tests. Loans under 150K may submit a certification on or before the date the loan forgiveness application is submitted. Yeah, this is all part of the loan forgiveness application, and attesting that the eligible entity meets the aggregate applicable revenue loss requirement. So to get the full loan forgiveness, at least 60% of the costs have to be for payroll, and the remainder is up to the other non-payroll costs. All right, supplemental funding. So for bars get supplemental funding. So those are this was from the original guidance we got, and we got some more clarifications. So my other slide had a little more detail. So original PPP loan amount would have changed to the new rules. So we talked about partnerships, where original loan did not include the self-employed earnings of partners. Borrowers who returned their original loans, or they took a reduced loan, or now. Um, um, Now, one of the big tax law changes regarding the employee retention credit, and we're going to spend a bunch of time on that. So that's going to be a big deal, because previously, if you took a PPP loan, you cannot take the employee retention credit. Now you can. And as part of the new tax law, it's been extended to the first 2 quarters of 2021. So this employee retention credit goes on to June 30th of 2021. So you have to request additional funding before forgiveness is granted on the original loan. So that's the most important thing. If you already got loan forgiveness, you can't get additional funding. That's basically it. So that's why last year we kept telling people to hold on, because there's a stack of pending legislation, and we just didn't know when Congress was going to pass it. A lot of banks, to their credit, were not accepting loan forgiveness application. They said, "Whoa, there's all these possible changes," and we know at least 1 million people did submit for forgiveness, and now we need to figure out how to redo them or fix them because the rules have changed. So anyway, so for the second draw loans, this new PPP loan, it ends on March 31st of 2021. Initially, there's a focus on first-time borrowers, the micro business of 10 or fewer employees, and they were shooting for the loans of less than $250,000 in low-income areas. So that was the initial push here, was to try to push underrepresented businesses in there. Same thing with the second draw loans. Target was for the micro employers, 10 or fewer employees, and loans of less than $250,000. For the second draw loans, the maximum is $2 million. And here's a big change. The covered period is between 8 and 24 weeks. Under the previous law, it was 8 or 24 weeks. Now it's 8 and 24 weeks. So you can move the numbers around to see what works out the best for you. And because of this update in the law, the covered period is extended through March 31st of 21. That's the last day you get loans. So the additional entities that can get PPP loans are 501c6 organizations or destination marketing organizations. They couldn't get a PPP loan last year because they weren't on the list of eligible entities. Now they can. They have to have 300 or fewer employees. Examples are chambers of commerce, the Better Business Bureau, economic development organizations, tourism boards. There's a lobbying threshold, so less than 15% of the money is used for lobbying, less than 15% of activities are lobbying, and they have to spend less than $1 million on lobbying. And this is for the past year. So if they have too much lobbying, then they still wouldn't qualify. So that can apply to many organizations that we know about. All right. Let's talk about those new eligible expenses. The first are the covered operations expenditures, that's software, cloud computing, and other human resources and accounting software. Then we have covered property damage costs. So we had some public disturbances or riots in 2020. And so if you have costs as a result of vandalism or looting, and it's not covered by insurance, we can use the PPP second draw money to cover these costs. And then covered supplier costs, expenditures to a supplier pursuant to a contract, purchase order, or order for goods in effect prior to taking out the loan. Most typically it's what? Lettuce, right? Or I remember last year in the early part of the pandemic that the TV stations would interview business owners and all the tough times they're having. And guess who they interviewed the most? Sushi restaurants. The poor sushi restaurants, because you can't keep sushi or raw fish for a long time. So they lost a lot of money because they weren't able to sell it. And I don't know, take out sushi for raw fish. I don't know. That could be a bit of a challenge. Additional expenses are covered worker protection expenditures, PPE, PPP, and adaptive investments to comply with federal health and safety guidelines. That's buying that acrylic, buying the shields, the masks, the face guards, the bunny suits, and all those kind of things. And that also includes fixing your office too, buying those acrylic shields at the front desk, or putting plastic between all your employees, or raising the height of their cubicle walls. I just saw an article that also includes setting up a drive-up window. So in my client base, I have a number of restaurant clients, and the ones that are doing the best are the ones with drive-throughs. I mean, you just stay in your car, a guy hands you a bag of food, and you're out of there. They have more than tripled their income this year. It's amazing. Sadly, the sit-down places haven't done as well. But so adding a drive-up window, and I've seen some buildings where it used to be a drive-up window for a bank. I used to be a bank teller in Alameda. That's where I grew up, and I worked the drive-through windows. People drove up, they stuck their deposits or whatever in this pneumatic tube, and then we did our thing. We put our money in the tube, and it went back to them. If they had kids, we gave them lollipops. If they had dogs, we gave them dog biscuits. So I because of ATMs, people stopped doing the drive-through. But hey, you can repurpose those for drive-through windows. Your clients can pick up documents or whatever stuff from you through a drive-up window. So those could be included. Also, the new law kind of gave us some more clarification. So when it came to computing payroll costs, the law says they clarified to include group life, disability, vision, or dental insurance. So they're pretty specific about that. All right. So what kind of supporting documents you need to apply for a second draw loan? So of course, the completed application, the 2483 or 2483 SD, whichever is appropriate. Then proof of your monthly costs for payroll, proof of payroll costs or self-employed income. Self-employed income is documented with your Schedule C. Proof of eligible non-payroll expenses. So you might summarize what those costs are and with your ledger and copy the bank statement showing the payments. Proof of business operation, show that you're really in business. An active status with the Secretary of State, so show that you are in business, because I guess there's been a lot of fraud in this program. So there's all these new requirements to cut down fraud. If you have a fictitious name statement, print that out. Proof of ownership, government issued ID for all the owners and email addresses for all the owners. So what this means is if you're applying for a second draw loan or a first draw loan, it's going to take a little longer. We've heard stories last year how quickly people got them, and they were pretty proud of that. Unfortunately, a lot of fraudsters got it too. So now there's more anti-fraud documentation in there. So it might take a little bit longer. So be a little bit patient here. And also there's an article I saw yesterday in the news that the American Bankers Association pointed out there's a flaw in the portal. So there's some problems with the portal. So they need to get that software glitch fixed. So the second draw form is the 2483 SD, Paycheck Protection Program second draw bar application. So you go to the lender first, and you can submit through the SBA site to increase the PPP loan, even the loan's been fully disbursed. So the first step is go to your existing lender. Hopefully they can help you out. In the big picture, there's the maximum size for the overall loans are $10 million. So if you got your $10 million PPP loan, you can't get a second draw. You already hit the maximum. If it's a corporate group, that's $20 million. So if you're there already, you can't get more. And the borrower, the lenders could ask for more information. And I've been hearing that a lot. It's like, well, the form's instruction says I don't have to give them this, but the bank can ask for it. The bank could be stricter than the SBA. So what are your certifications? So you go through the certifications that you have not or not received another second draw, that for the second draw, you realize the reduction in gross receipts, and you should prove that, make sure you have proof of that. And that you used all the first draw money for only eligible expenses and that you're not an ineligible entity. Yeah, so in the instructions, they give us a better definition of seasonal employers. So I'm thinking about a Christmas tree farm, right? Or I sell pumpkins for Halloween, and that's all I do. So it's for businesses to operate for no more than 7 months in a year and earn no more than 1/3 receipts in any 6 months in the prior year. So that's how you fit the definition of a seasonal employer. If you return all or part of the original loan, you can reapply for the difference. Um, and the borrowers whose loans impacted by changing guidance, you can modify the loan. So we have some better instructions for that now. So they updated the list of ineligible businesses. So some of these you've seen before, some of these you haven't. An entity that's permanently closed. If you're closed, you can't get a PPP loan. If you weren't in operation on February 15th, 2020, if you weren't in operation on that date, sorry, you can't get a PPP loan. There's a new loan program or grant program called the Shuttered Venue Operator Grants, and those are for our theaters, our concert venues. They really suffered badly because we haven't been able to go to a concert or a movie or anything like that. I'm really pleased to see this. No publicly traded businesses. So it's basically aimed at small private businesses. No lobbying organizations, no hedge funds or private equity firms, no one affiliated with the People's Republic of China or anybody who's registered under the Foreign Agents Registration Act, or if the president of the United States, VP, head of an executive department, member of Congress, or spouse of all the above own at least 20% equity, that they're not eligible. And then you can look in the CFR for a list of other entities that aren't eligible. You can look that up. Household employers, and if you're in bankruptcy. So that kind of makes sense. So if your business is any of these, you can't get a PPP loan. The IRS gave us Revenue Ruling 2021-2 on January 6th, and that was in reaction to the CAA 2021. So it gave us clear guidance saying that gross income does not include any amounts that were from the forgiven PPP loan, and deductions are all deductible now. So we don't have to reduce deductions. And the tax basis and other attributes of the borrower's asset will not be reduced as a result of the loan forgiveness. And this applies to the first round of PPP loans from 2020 and the second draw. And so what this does is that it withdraws or obsoletes the IRS Notice 2020-32 and the revenue ruling that causes a lot of consternation last year, 2020-27. We spent a lot of time studying that, getting to know it. Well, we can erase that now, which is great. Okay. So
Hey, Larry, you want to pause for, there's a question in the chat that maybe we should answer.
Ooh, a long question for the chat. Okay, let's, okay. I've gotten, one here from the Q&A. I've gotten the SBA loan last year. Can I get again for the second time? So Jay, you have to see if you qualify. First of all, do you qualify for what's called a first draw? If you meet any of those qualifications. Now, if you already got loan forgiveness, you can't get another PPP loan. You're done. And however, for the second draw, if you have a more than 25% reduction in gross receipts, you might qualify for a second draw. So you need to take a look at that. So Duncan sent a really long one here, so bear with me. If the nature of our business required a literal shutdown for half of 2020, our payroll baseline for PPP second draw is less than 50% of our actual payroll. Example, we calculate 6 months of when we were open, then we divide by 12 months. This reduces the loan amount greatly. Are there any workarounds? Well, it's actually not based on your 2020 numbers. It's based on your 2019 numbers. So it's based on your 2019 numbers. So we'll go over that in a little more detail. So let's go back to the IFRs, the interim final rules that the SBA issued. And God bless them for doing that. It's about 130 or 140 pages so of guidance, pretty well written, pretty easy to follow. So I give them some credit for that. So I had the interim final rule on PPP as amended by the Economic Aid Act. So it consolidates all the guidance we had in the past, and it gives us a little better guidance on what to do here. Provides general rules relating to loan increases and loan forgiveness. So Jay, you'll want to take a look at that. I think this is the 82-page one. So under the SBA website, IFR that was issued on January 6th of 2021. And then the second one's about 42 pages. That's the interim final rule on second draw loans. And it kind of gives us more guidance on the differences between the first draw and second draw loan. There's another document that the SBA put out. It's the SBA guidance on accessing capital for minority, underserved, veteran, and women-owned business concerns. So basically it gave, if you fit in any of these categories, you had a head start. You had a 2-day head start to apply from community financial institutions. So there's quite a few of those around here. We have many in Oakland. So those are targeting those smaller businesses, 10 or fewer employees, loans of less than $250,000. And so the Congress has set aside $25 billion just for this program alone, because they were underrepresented the first round here. Okay. Simplified forgiveness. Wow, that's exciting. Hallelujah on that. So now just to point out, it's simplified forgiveness, not automatic forgiveness. So there's been a lot of talk from Congress and people in the public who want to say, we should forgive all the loans of $150,000 or less. Well, it's simplified instead. So it's a one-page form. It's a one-page form. You have to attest to complying with PPP requirements. So on the form, it's form 3508S. It's been updated. It was just posted on the website last week. So we got the new form here. So on the form, you sign and submit the one-page form. You attest to complying to the requirements. You enter the loan amount and the loan number, the number of employees retained, and how much of that loan was spent on payroll. You still got to retain your records, 4 years for employment records and 3 years for everything else. But I'd say 7 years just to play it safe. But the thing is, in case of an audit, you'll be required to provide the documentation to substantiate the loss of revenue when applying for forgiveness. So you it's always important. You can't just put a number down. And I've seen people do that when they do their own tax returns. How'd you get that number? Oh, I just made it up. No, you can't do that. You have to show how you get that. Remember when you're in math back in high school, you can't just say the answer is D. You have to say how I got to D or how I got to C, whatever the answer was. You have to show your work. We tell our kids that they're complaining about their homework. Well, guess what? We still got to do it as adults. And guess what? We still got to use our math. We got to use algebra. We still have to do it. So don't forget the stuff we learned in middle school. All right. So the form 3508S, it was original. The first time we got the 3508S, it was for loans of $50,000 or less. We can use it for first or second draw loan. You still got to do the math. You can't use it for both loans on one application. So you have to submit 2 applications. You have a first draw and a second draw. So you have to separate them. If your loan is $50,000 or less, there's no FTE reduction or wage reduction calculation. So you might have some FTE reduction, full-time equivalent reduction, or wage reduction. You don't need to worry about it if your loan is less than $50,000. If your loan is more than $50,000, you still have to calculate those FTE reduction and wage reduction adjustments to forgiveness. You still have to do that. Even though the schedule's not in the application, you still got to do those calculations. So it also applies for loans. If your loan has to be less than $50,000, but if you have what's called an affiliate loans, a whole bunch of entities here, if it totals $2 million or more, you still got to do those calculations. So read the instructions very carefully. They actually made it quite readable. All right. So the certification that you're signing to, saying that you have complied with all the requirements, including the rules related to eligible uses of the loan proceeds. No, you can't use it to buy a car or jewelry. The amount of PPP loan proceeds must be used for payroll costs, at least 60% for payroll, 40% for non-payroll. And the calculation documentation of borrower's revenue reduction. So you got to have that proof that you were eligible for that second draw. And the calculation of loan forgiveness amount in case there's FTE reductions or wage reductions or owner compensation limits. All right, EIDL loans. So that's been revamped also. So there's been a repeal of the EIDL advanced deduction for PPP loan forgiveness. So let's say you had a $100,000 PPP loan, you applied for loan forgiveness, and you had a $10,000 advance from the EIDL loan. Well, last year, if you apply last year, let's say you qualify for the full 90,000, the full $100,000 forgiveness. So the bank and the SBA will give you the $100,000 forgiveness minus $10,000. So your net forgiveness is $90,000, and you still owe $10,000 on the PPP loan, which is at 1% payable over 5 years. So that has changed. That's a real big deal. And also the EIDL program's been reopened again. Um, it begins in February of 21. So there's the extension of the subsidy by the SBA and the other, what they call Section 7A loans. It's capped at $9,000 a month. Again, they're aiming at the underserved communities, and the tax treatment is consistent with the PPP, so it's not taxable. So they're trying to get more targeting towards certain communities, and then there's this new grant for shuttered venue operators. So I think we'll be hearing more about that. The various theaters we have in our area here: theaters, museums, zoos. So that's gonna be interesting. So if you got a shuttered venue operator, you can't get a PPP. So it's one or the other. All right, I'm going to change subjects to the employee retention credit. But before I do that, I'm going to look to the right here and take a look at some questions we have here. So Vicky's got a question. I am applying for the second PPP. First one's fully forgiven. I know we can go back to March 2020 for some of the newly eligible expenses. That's right. You can go up to expenses incurred after March 27th of 2020. Does the payroll portion apply for the date the new loan funds, or does the 8 to 24 period start from the date you go back to the newly eligible expenses? So there's a couple of different points here. So the 8 to 24 week period is what's called the covered period. So it goes back to when the loan is funded. So take a look at the funding date there. Okay, what are the maximum to get as an increase on the first PPP loan? Well, first of all, you have to see if you're eligible for a first draw loan, and then the same calculation. And we'll go over that later in the presentation here. All right. So if our business started in December of 2019 and we don't have proof to compare with 2020, can I qualify for PPP? If you're talking about the second draw loan, that'll be a bit of a challenge because you won't have much of a comparison to make there. So we'll have to apply those formulas to see how they work out for you. All right, let's go to the employee retention credit. And I'm barely halfway through here and we're running low on time. So I'm gonna go through this pretty quickly. Bottom line, the 2021 tax bill that we got significantly changed the employee retention credit. So before you couldn't get a PPP loan and the retention credit. Now you get both. Big deal. That's huge. So what does that mean? So when you're applying for loan forgiveness, you don't want to use up all the payroll. We might want to save some of it for the employee retention credit. So we got to be real careful about this because it's a big deal. The ERC was meant to encourage employers to retain employees and maintain salary. It's a credit against the employer's share of Social Security, and the credit reduces payroll taxes after any other credits, the qualified family and sick leave credit that we had from the Family First Act. So it's a fully refundable tax credit for employers equal to 50% of qualified wages. So the maximum amount of qualified wages for the year is $10,000. So therefore, the maximum credit is $5,000 per employee. And so this is for wages paid after March 12th of 2020 and before January 1st of 2021. This is the existing program. So the previous law says you cannot take the ERC if you're taking the PPP loan. So that's changed. So who are eligible employers? Basically almost any trade or business, which includes tax exempt organizations because they have payroll also. So there's two tests you got to look at. You're either fully or partially suspend operations during any quarter of 2020 due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings due to COVID-19, or experience a significant decline in gross receipts during the calendar quarter. So it's available for employers of basically any size. So it's for-profit business and tax exempt organizations. They can claim the payroll tax credit. And so for operations partially suspended for purposes of employee retention credit, uh, the operation of a trade or business is partially suspended if appropriate government authority imposes restrictions on employers' operations, orders, limit commerce, travel, or group meetings for commercial, social, religious, or other purposes due to COVID-19, and the order affects the employer's operations of its typical operations. And all three of these tests have to be met. I can think of many clients that obviously can meet this. My bars and restaurants, obviously, they were definitely affected by this, or my retailers. So yeah, I think of a lot of people that can be affected by this. And here's the definition of government orders. So if you voluntarily shut down but wasn't forced to, that doesn't qualify. Or if the government orders you to reduce your hours, some businesses had a curfew, right? You had to close earlier in the day, or you had a essential business, but you lost your customers through the shutdown. It doesn't mean that the business has been partially suspended. But if you lose enough customers, you won't use this test, but you use the significant decline in gross receipts test. That's the other test. Essential business may have full or partial suspension of operations if suppliers are unable to make deliveries. Your suppliers can't make it. I was affected by that. During tax season, I ran out of envelopes. I ordered envelopes from my supplier, and they literally got shut down. They said, "Larry, your box is on our loading dock, but we just got shut down. I can't even give it to the UPS guy." So for a number of weeks, my box of envelopes sat at the supplier because I couldn't get my envelopes from them. Go figure. Employers' workplaces closed by government order, but their employees can work from home, so they're not fully or partially suspended. Or employers' workplace closed by government order for certain purposes, but remain open for other purposes will be considered partially suspended. So take a look at the instructions for more detail here. So the significant decline in gross receipts, a significant decline in gross receipts is calculated by determining the first quarter in 2020, if any, in which the employer's gross receipts are less than 50% of its gross receipts in the same quarter in 2019. So if the gross receipts drop by more than 50%, you can count that quarter as a quarter eligible for the credit. So each quarter in 2020 after that counts as a significant decline until the end of the first quarter in which gross receipts are greater than 80% of its gross receipts in the same quarter for 2020. So here's an example here. So in our first quarter, we had a 48% decline. And the second quarter, it was 83% decline. And then third quarter, they were at 80%, 83%, and then third quarter is 92%. So they seem to be okay here, but they had a significant decline in the first quarter because it's more than a 50% drop in revenue. So the employer in this case is entitled to a retention credit with respect to the first and second quarters because the second quarter was more than 80%. So your payroll service should be able to help us compute that. Hopefully they have all that information in the computers. So qualified wages are compensation paid to employees, and they include qualified health plan expenses. So make sure you don't forget to include that in the calculation. So the cap is at $10,000. So if you're going to use the W-2 wages and healthcare costs for the ERC, you can't include that with the PPP loan forgiveness. So make sure you separate them. So you can both claim the ERC and borrow a PPP loan. You just can't use the same wages and healthcare costs for forgiveness and the ERC. You can't do that. You just got to separate them. Priority goes to the ERC first over the PPP, and you can elect not to include certain wages and healthcare costs applicable to the computation of the ERC. So we'll have to work with that. So we not only get a PPP loan forgiveness, you can get an employer tax credit. So we're going to get some more detailed guidance. So I predict that the next 100 page of guidance we're going to get is how to more specifically do this ERC calculation, because it's a bit confusing here. So the SBA is going to issue us guidance on how to count the wages rather than the ERC credit. So, however, what if your PPP loan is not forgiven for whatever reason? The SBA denies your forgiveness. Well, those payroll costs can still be used as qualified wages for purposes of the ERC. So you can do that. Let's hope we don't go there, but you can do that. So here's an example. You got a $100,000 PPP loan. Also, you're eligible for the ERC. So over the 24-week period, you spent $80,000 on W-2 wages and healthcare and $20,000 on rent. So 40,000 of the qualified wages, of the wages are eligible for the ERC. So 40,000 of the qualified wages are eligible for ERC and not to be forgiven. Then you can elect to treat the $40,000 of qualified ERC wages as payroll costs. Um, uh, the other 40,000 you treat as payroll costs for PPP loan forgiveness. If the loan's completely forgiven, you can't claim the ERC on the $40,000 of wages. But if it's not forgiven, you can add that 40K to the loan forgiveness for the ERC credit. So let's change the example a little bit. Same taxpayer, he borrowed $100,000, but he spent $180,000 on W-2 and payroll costs. So we do the math. 50,000 of those costs qualify for qualified wages for purposes of ERC. So we can't use that 50,000 for the PPP loan forgiveness, but that's okay. We have 180 minus 50. We still have $130,000 of forgivable payroll costs, more than enough to get full forgiveness. So in this case here, this taxpayer got $100,000 forgiven PPP loan and an ERC on $50,000 in wages. So that's significant. That could be a lot of money to people. What about 21? So it's extended for the first 2 quarters of 21. So the ending date is June 30th of 21. And the credit is increased from 50% to 70%. So instead of 50% credit to 70%. And they even changed the qualified wages. It's not $10,000 a year. It's $10,000 for any quarter. So that's huge. So let's say in this example here, we had $10,000 in Q3 for 2020, $10,000 for Q4 in 2020. So the credit here is $5,000. 50% of 10,000 equals $5,000. Same numbers for 21 for Q1 and Q2. In this case, the credit's $14,000. So 70% of $10,000 for each quarter. Pretty good. So let's not ignore the ERC. Pay attention to the ERC. And also they changed the qualifications for the first half of 2021. The gross receipts is less than 80% of the same quarter in 2019. So you compare 2019, not 2020. So first quarter of 2020, compare receipts in that quarter, first quarter of 2019, not the first quarter of 2020. And the second quarter of 2019 is going to make it really easy for you to establish an eligible quarter. So if your business didn't exist at the beginning of the same quarter in 2019, then you would use 2020. So yeah, read the directions for it. This is a big deal. So the remainder of the presentation is just an overview of the PPP program. So I'm going to buzz, since we only have 10 minutes left, I'm going to buzz by these remaining slides pretty darn quickly here. So this just gives us an overview of the PPP program. June the 5th, we got the PPP Flexibility Act. They made some revisions to the program. So I'm going to go over the most relevant parts for you to know here is the maximum loan amount. That calculation hasn't changed. It's 2.5 times the average monthly payroll costs, not just what you see on the 941, because and I think we'll have a list here later on what goes in there. Oh, here's what it goes. Salaries and wages up to a maximum $10,000. Not independent contractors, payments of any cash, tips, or equivalents, vacation, parental, family, medical, or sick leave. However, if you're going to claim that, you can't claim the employer tax credit. So you have to choose if you want to include that or not. Termination allowances, group benefits, health, vision, dental insurance. Now, if you are a union employer, so that's the health and welfare costs, so that makes it pretty easy if you have a union workforce, because that's a pretty big number. So it's not just the W-2 wages, but you add the health and welfare to that. So that can really, really increase the size of your PPP loan. Retirement benefit payments and state and local taxes, SUTA taxes. So we don't count federal withholding or the employee portion of this FICA tax. So health insurance costs are not included for self-employed people, general partners, or S corporation owner employees. However, retirement costs for S corporation owners are eligible costs, and retirement costs for self-employed and general partners are not part of the eligible costs. And when it comes to employer retirement contributions, it's capped at 2.5 months worth of the 2019 contribution amount. So this prevents people from front loading their retirement plans. They decide to write a big check. Other costs are rent, business loan interest, utilities, gas, water, electric, telephone, landline, and internet. When it comes to rent, it's the rent for your office space. Don't include the CAMs. So the CAMs are not part of it. So that's why it's important to include the lease agreement, because you can't just close a copy of the rent check because there's CAMs in there too. We don't want the SBA to deny your loan forgiveness. For self-employed borrowers, it's based on your Schedule C. The maximum loan a self-employed person can get is $20,833. Loans have a 5-year maturity at 1% and no personal guarantee. So the cover period now is between 8 and 24 weeks, not 8 or 24 weeks. So that's changed. These are the steps to loan forgiveness. So this really hasn't changed. So step 1 is you compile all the costs that qualify for loan forgiveness. Now that we have the ERC, when you're doing payroll costs, you might want to not include all your payroll costs. You might want to set aside some money for the ERC. If you qualify, see if you qualify. Calculate any reduction in payroll, any reduction in FTEs. And then if you have the restoration, or we call safe harbor, if you hire back your employees or back in business, then we might not have to reduce your loan forgiveness by the reduction FTE or salary. Okay, loan forgiveness, use of funds. Okay, I'm going to skip these examples due to time. So rehiring employees. So, you had a certain number of employees as of February 15th of 2020, and you try to hire them back. But if your business is all shut down as of December 31st, you're exempt from having to reduce your headcount or salaries. So see where you're at on December 31st. But you had until December 31st to get your people back on the payroll. So we got some guidance on this here. So you offer to rehire your laid off employees, but your employee declines the offer, that doesn't get reduced. So do it in writing. If you're going to rehire an employee, do it in writing, not a text, not a phone call, but do it in writing with a written receipt saying, sorry, boss, I'm not coming back. I'm going to collect unemployment. Well, you can't collect unemployment if you turn down the job. So anyway, you want to document that. Employees are terminated for cause, or they resign on their own, or they requested and received a reduction in hours. So that doesn't reduce your FTEs. So that's something to look at here about these safe harbors, about rehiring your employees, and see where you're at on December 31st. Just a reminder, loan forgiveness is not automatic. You have to apply for it. And the bank's rules vary from bank to bank. Some banks are a lot stricter than others. Some seem to be pretty loose. So it depends on which bank you're dealing with. Okay, I'm not going to go into detail on these FTEs here, but you can read this later. These are examples of how to calculate the reduction in FTEs and salaries. So in terms of documentation, it's all about documentation. You need the 941s, your state payroll forms, your payroll records, all the proof of your expenses. So basically work with your accountant on getting this stuff together here to document these things. Cancel checks, receipts, lease agreements, CAM reconciliation. If you want to use the home office as part of the expenses, only applies if you claim the home office on your 2019 tax return. You filed a form 8829 in 2019. So that's important. For self-employed people, you need to enclose a copy of the form Schedule C from 2019, and hopefully it matches what you sent to the IRS. It's got to be the same. All right, so loan forgiveness applications, the Form 3508. I'm not going to go these examples here since we're running low on time. Uh, these certifications are a real big deal because you're signing your name to them, and this is why many people return their loans. The first certification you make is current economic uncertainty make loan necessary to support your ongoing operations. That's a very important sentence, and this is where the SBA is auditing people. Uh, and it doesn't matter how big your loan is. So, there are people of means who got PPP loans, and basically they're going to get it forgiven. So they're getting a handout from the government. So the government wants to make sure that's going to the right people. So think about these certifications, see if you should return your loans or not, or apply for forgiveness. And we're going to see some more articles in the news or more news stories about people who got PPP loans who should not have. So certification is very important. You say they're all true and accurate. Any false statements punishable by law, and that you will share information with the SBA and the SBA Office of Inspector General. Okay, I'm going to skip these new FAQs, 35 OAS. Okay, so the review process, the lender has 60 days to review your application and then forward it to the SBA. You might not hear from them. You might not. Then the SBA has 90 days. So what does that mean? You might not know for 5 months, whether you got your loan forgiveness or not. The SBA has told us they will audit every loan over $2 million, although they reserve the right to audit any loan. So if you got turned down for whatever reason, and you can go to the SBA's Office of Hearings and Appeals. So the request is made by the borrower to the lender within 30 days of notice from the lender, and the lender forwards to the SBA within I don't know how many days. But the SBA has discretion on whether they will undertake the review or not. And only these decisions can be appealed. The SBA says you weren't eligible for the PPP loan, or you weren't eligible for the amount that you got, or you used the money for ineligible purposes, and you weren't eligible for full or partial forgiveness. So that's when you can appeal. This is a link on where to do the appeal. It's a legal process, administrative and judicial review of an administrative law judge. So which means us CPAs or enrolled agents, even though we can represent before the IRS, we can't represent you before the SBA. It has to be represented by a lawyer. And the thing is, the length of the appeal is 20 pages. So what does this mean? You have a one-shot chance of loan forgiveness, because this appeals process sounds really difficult and expensive and hard. So you have a one-shot chance. So we want to get it right the first time. Don't be sloppy. Don't expect to negotiate with them. It's not going to work that way. The Department of Justice is prosecuting PPP fraud. So we heard these stories in the news. First one was this Rhode Island man, and then Georgia. That was a hip hop guy. He used to buy a Rolls Royce. And engineer in Texas, he claimed he employed people, but he didn't. So if you have leftover money, you didn't spend all, you can pay it back, or you can keep it and make it into a low interest loan. So for the first round, if you don't apply for loan forgiveness, the payments start on October 10th of 21. The SBA gives some guidance when there's a change of ownership. So if you're selling your business and you got a PPP loan, that's part of the escrow process now. A lot of times the PPP loan is set aside in the escrow. And so the SBA and the bank could approve or not approve of the change of ownership if you're selling your business. Privacy issues, it's all public information. So you saw news stories of people who got PPP loans. All the reporters were digging through it. So the court has forced the SBA to release this information. So you're bored, you can find out how much of a loan your friends got. And their names and addresses and loan amounts are in there. More forms, 3509 and 3510. These are what's called necessity questionnaires. This is kind of like a precursor to an audit. These are only for loans of over $2 million, and you have to show why you needed the PPP loan. So they want to know what your income was and who was paid more than $250,000. So that's what this is all about. Another new form 3508D, and this is if you are applying for loan forgiveness for a first draw PPP that you got before August the 8th of 2020, you got to submit a form 3508D. That's the one that says if you have disclosures of any controlling interest by a covered individual, and that's the president, vice president, head of an executive department, member of Congress, or spouse of any of the above. So if you have any of these people as an owner of your business, you got to fill out the 3508D. There was some confusion last year. If you looked in the upper right corner of the forms, they said expiration date 10/31/20 or whatever the date is. And so a lot of people thought, oh no, loan forgiveness is due October 31st. No, 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 no. This has to do with the Office of Management and Budget, OMB. That's a paperwork requirement. It's part of the Paperwork Reduction Act. So that's what that's all about. So when you go to the SBA website, make sure you download the latest form because they're always changing. All right, a couple more things to talk about. California. So last year, as part of the California budget, the state passed AB 1577. What that said was loan forgiveness is not taxable for California purposes now. Originally it was. Now it's not. However, AB 1577 says if you get any loan forgiveness, it's not deductible. It doesn't matter what the federal law is. We don't care what the federal law is. It's not deductible. Okay. Is that the final word? No. We have AB 281. That was just submitted by Assemblywoman Autumn Burke. She's the chair of the Assembly Revenue and Taxation Committee. She happens to be the author of AB 1577 also. So AB 281 declares the intent to conform California law to federal law, allowing for the deduction of expenses paid with forgiven PPP debt. So contact your legislator. Here's a link to find out who your legislator is. I think mine is Kevin Mullen, and he is on this committee. So I'm actually seeing him next week. So via Zoom, of course. But I'm going to bring this up with them. So we'll see. So please, 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 if you want to be able to deduct your forgiven PPP loans on your California tax return for those expenses, push for AB 281 to get it signed by Governor Newsom. So for California, what do we do? I would recommend putting your tax return on extension. So don't rush to get your tax return done because we don't know what the law is yet. So we'll see if this law passes. Okay. All right. Well, thank you for your time. The last few pages here are some links to the forms. So the IFRS are here, the IRS notice, and the guidance for underserved communities, Form 35 OAS, 2483, 2483 SD, 3508, 3508 EZ, 3508 D. So just go to the SBA website to download those forms. I'm tired. Well, thank you for your time today. And I think what we'll do here is work on these questions we have here. So Sonia, I'm going to work on questions. Is that okay?
Yep, go
All right.
ahead.
Let me take a sip though.
Please do.
So, we talked about a lot today. So anyway, so make sure you email Sonia for a copy of the send. I noticed a couple of typos in there, so I apologize for that. So Sonia, don't email them yet. Let me clean up a couple of typos I noticed.
Sure.
All right. Somehow my fat fingers.
No
Okay.
worries.
Let's see here. Do we have a lot of chats? Okay, I'm going to take a look at the chats here. All right. I think I've already addressed that. I think we're in good shape. If our business started in December 2019, we don't have proof to compare. Yeah, that's going to be tricky. So take a look at the rules on how to calculate that 2.5. So if it's a Schedule C, it's going to be based on the 2019 Schedule C. If it's a small number, you have a small loan. That's the way it goes.
Hey Larry, I think there was a question at the way beginning from Duncan
Okay, let me scroll to that.
when applying for round two. It's about owner's compensation.
Owner's compensation. Yes. So owner's compensation. Of course, we got the dollar limit of $100,000. So for that's owner's compensation, employees compensation. Up to $100,000. But it's basically the amount that we can count towards the loan calculations is 2.5 divided by 12 times the owner's compensation up to $100,000, which does that come out to? $20,833, I think. You can check my math. All right. Okay, good.
All right. Is there any more questions?
Let's see. Vicky had something here. I'm not sure if I read this one. I'm applying for a second PPP with the change in eligible expenses. Oh, I think I already answered this one. This is the one going back to March of 2020 for expenses.
Yeah.
Yeah, PPE, plexiglass, and all that. So, yeah, so we might be able to now. The thing is, you might not qualify for the first draw loan, but you might qualify for the second draw. So check to see you have the reduction in gross receipt to see if that'll get you there. So, you know, and you know what? There's going to be still a lot of unanswered questions here. So, we're waiting for some more guidance on the ERC. I think that's a big deal. So don't rush. My bottom line is we got time. We got time. You got 10 months from the end of your covered period to apply for loan forgiveness. 10 months. So that could take us all the way to October. So we got some time here. So I knew a lot of people were eager to get their loan forgiveness in. A lot of people were eager to get it over with, but the rules kept changing. And so now some people are stuck with more difficult problems where they already applied for forgiveness and now they still owe $10,000. How do I fix that? And good luck trying to get the bank to help you with that. That could be a bit of a challenge. So this is why we kept pushing patience. This whole process, patience. It's all about patience. Okay, let's see. I think we're good. So if you've got any burning questions, I'm gonna give it one more minute here, and then after that, I'm gonna hit the end of the recording button here. So thank you very much. The recording of this is going to be on the Golden Gate Better Business Bureau YouTube page, right, Sonia? We'll have it up there if you want to watch this again. But
Yep.
certainly check out the Golden Gate Better Business Bureau. If you're not a member, if you're in business, I've been a member for nearly 30 years. It's been great. As a consumer, I use the BBB to help me find vendors of getting things fixed around my house, like a garage door guy. I found him through the BBB. My storage unit is a member of the BBB. I always go to restaurants that are members of the BBB, and patronize business are members of the BBB. That's worked out great. On the complaint side, that's been great too. I've had issues with AT&T. They've only had 53,000 complaints. So there's always some billing problem or something that you can't resolve through customer service. But the beautiful thing is I filed a complaint with the BBB. I get in touch with someone from the office of the president, and they were able to get everything all straightened out. So, I'm just picking on them because I have used them for the fourth time now over the last 20 years. So I know. So anyway, I fully endorse it. Fully endorse it. So,
We
there's
have
a
a
couple of
couple more
questions.
questions.
How long do we have to request forgiveness? 10 months from the end of your covered period. So that's 24 weeks from the date you get the loan. Add 10 months to that. That's when it's due. If you don't turn it in, if you don't file for forgiveness, you got to start making payments then. And the last question is the economic injury EIDL loan, EIDL, economic injury disaster loan forgivable? No, they're not forgivable loans. They're not forgivable loans. So if you go to the EIDL program, that's separate from the PPP. So this is what you got to be careful about. So a lot of people got the EIDL loan first and then applied for a PPP. The PPP refinances the EIDL loan, which is a good idea because the PPP loans at 1% interest rate, but the EIDL loans at a 3.5% interest rate. So you'd rather pay 1%, right? So if you only got an EIDL loan and no PPP loan, they're not forgivable. They're not forgivable. They're loans. So you have to pay them back. And they're done through directly with the SBA versus through a bank, a private bank. So we've got this private partnership. What do you say? The public-private partnership. You got the private sector of the banks, and you got the public sector of the SBA, and you got us here, us tax advisors, trying to help our clients wade through this. All right, last question, Duncan, you got the last one. When applying for round 2, owner compensation, if a corporation's owner on W-2, should salaries be split out under owner's compensation or left on employee payroll section for an S corporation? Ooh, you're asking me this off the top of my head. So that's kind of risky for me to answer off the top of my head, but I think you still use that same calculation. So yeah, owner compensation. So what's owner compensation? Anybody that owns more than 5% of the business. So I think that's the definition, right? So double check me on that one. but that's limited at 2.5 divided by 12 for owner compensation, and then the employees are added to the whole payroll expense pot. So that's how that all works out, and work it through there. All right. Okay. Well, thank you, Sonia. Thank you,
Thank
Go to
you,
Get
Larry.
Better Business Bureau, for hosting this. I'm sure we'll do this again because we got more to learn. So have a great day, and thank you very much.
Thanks, everybody.
All right. Bye-bye.